All of these forecasts, of course, should be taken with a grain of salt because, after all, at the onset of the pandemic, these biggies had expected the housing market to fall. And we all know how the housing market turned out to be. YouTube is filled with views. Inflation, deflation, stagflation, hyperinflation, depression, expansion, housing market crash, and whatnot. Everybody on YouTube has a view. What do we believe? The economy in 2021 mostly had a good run. It created more than 500,000 jobs on an average per month during the year, and unemployment has fallen within hailing distance to where it was before the pandemic. The stock market has posted record highs. The retail sales have sizzled this holiday season, and of course, the housing market was white hot, coast to coast. Let's recap 2021 based on real estate headlines. Homeowners saw average house prices appreciate about 20% through the third quarter compared to a year ago. It was the largest annual home price increase in the history of the agency's house price index. Homes sold in a matter of days. Many buyers were priced out, and instead of buying, they ended up renting. The rental market also appreciated. Inflation. Inflation has taken the center stage. National debt is close to $29 trillion. Government has been printing the money out of thin air. It dilutes the value of dollar. US printed about $13 trillion during the course of the pandemic. 13 trillion is 13 and 12 zeros. If one were to spend $1 million every day, it would take close to 36,500 years to finish these $13 trillion. Have you ever wondered what happens when the government prints too much money? If you print more money, households will have more cash or money to spend after the same output of goods that are in the market. If there is more money chasing the same amount of goods, then inflation is born. For example, year 1, the output is 1,000, money supply is 10,000. So average prices is $10. Year 2, the output remains the same at 1,000, but the money supply has increased to 15,000. So the average price is $15. That means the inflation rate has increased by 50%. As this chart shows, inflation is currently close to 7%. Initially, we were told that inflation was transitory, but obviously now we know it's not. Global supply chains, in the wake of Delta, added to the soaring inflation. Delta was especially hard in Asia, where many supply chains began, including the vehicle industry, which is dependent on semiconductors produced there. Without chips, auto production and inventories collapsed, raising their prices. A similar dynamic has played out for a wide range of goods. Third, mortgage rates. To counter inflation, Fed will need to raise rates. As interest rates are increased, consumers tend to save more because they will get a higher return on their savings. With less disposable income being spent, the economy slows and inflation decreases. For a detailed understanding of the correlation between interest rates and inflation, I am posting a link to Investopedia below. In its recent FOMC, which is the Federal Open Market Committee meeting on December 15th, Fed Chairman Mr. Powell indicated speeding up the tapering of its bond buying program by mid-March 2022. With consumer prices increasing nearly 7% year over year, the Fed wants to remove this accommodative bond buying program and pave way for Fed rate hikes. How many rate hikes? The Fed shared its dot plot, which highlights the voting FOMC members' forecast on rate hikes. It showed the Fed feels there will be 3 rate hikes in 2022, 3 more in 2023, and 1 more in 2024. Note that these are forecasts only and do not represent a plan. Nobody knows where the economy will be a year from now and how the virus will chart the economy going forward. Inventory and demand. I had done this in a prior video. I compared the new listings from normal years 2018 and 2019. The charts show that the new listings in 2021 were either at par or below the normal years of 2018 and 2019. However, the sold listings for 2021 have always been above the 2018-2019 levels, which basically means that almost everything that was listed probably sold. New construction is also on downward trend. Like everything else, the prices of raw materials increased, there were labor shortages, supply chain issues, and whatnot. So new construction fell. Next, forbearance. About 4.7 million homeowners were in forbearance at one point. A lot of veteran and rookie real estate gurus predicted a housing crash when the forbearance period ends. In 2021, forbearance expiry hardly had any impact. Some say that due to the high equity in houses, these people in forbearance can easily sell their houses or move on. However, I ask, move where? With these high prices, they may not be able to afford to buy another home. The rents have increased proportionately. So maybe these homeowners might not sell their houses right now or move out till they are actually foreclosed upon and forced to evacuate. Even so, the current number of foreclosures is at 132,000, which, if actually spread across the US, is not a huge number. That might not affect the supply as much as some people believe it to be. Zillow. Zillow's flipping business became a flop. For most, nothing much has changed in terms of Zillow. They still go to Zillow to check on houses that are currently listed. But for us, the real estate fraternity, we did see quite some changes with Zillow. Many didn't know that Zillow had started buying and flipping houses through its iBuying division called Zillow Offers. Zillow Offers shut down in November 2021. Why? Honestly, this warrants a whole separate video about how the Amazon of real estate failed. But in short, they overpaid to buy these homes based on their algorithms, and they struggled to find contractors and raw materials amid a broader labor and supply shortage. Secondly, Zillow became a brokerage from a marketing partner to realtors, thus competing with those very agents and brokers who funded their Premier Agent program. All this info is good. The bigger question is, what comes next? Will the real estate market soar, sink, or stay put? If only I knew that, I would place all my bets on that. Because prices cannot continue to grow at this pace, there is a consensus that growth will slow next year. But there is no agreement as to what it will look like. Why are the predictions so different? There is a huge unknown: mortgage rates. However, all of these forecasts, of course, should be taken with a grain of salt. Because, after all, at the onset of the pandemic, These biggies had expected the housing market to fall. And we all know how the housing market turned out to be. Actually, during that very time, 12th March 2020 to be precise, I posted on my business Facebook page on how this outbreak had merely postponed the demand for house buying, a demand that would return. And that's exactly what we saw. Again, in end of 2020, I made a video mentioning why the house prices will not crash in 2021. That analysis was right too. So will US home prices go down at some point? Yes, they will. There are some big investors in the financial markets who believe that the economy will collapse, the dollar will crash, or the real estate bubble will pop. But when? How long should home buyers wait to buy a home that they need? Till how long can they be paying their rents? I said it before and I'm saying now. Even a broken clock is right twice a day. So yes, the markets will at some point have to correct themselves. But will that be in 2022? Neither the pandemic nor the lawmakers stick to a script. There are known unknowns. Omicron won't be the last wave. An increasingly vaccinated population, booster shots, antiviral medicines should help ensure that though more people are getting sick, it will lead to less hospitalizations and less deaths. If COVID becomes an endemic and we learn to live with it, just like the flu, then maybe the real estate market will return to its seasonal patterns like before. Considering current circumstances, for 2022, I do not think the house prices will crash unless the housing supply increases dramatically. At this point, I do not see the demand falling considerably or the supply increasing considerably. If you have been following my videos, I have mentioned why I believe the demand is going to stay strong in 2022. But surely the double-digit appreciation should cool down. There might be a little correction, hopefully fewer bidding wars and more stability in prices in 2022. But so far, a crash, which is more than 20% of price reduction, seems unlikely for 2022. I plan to keep doing more videos and more updates, not just monthly, maybe twice a month, so I can present more current real estate topics. I have fun doing these videos and educate myself along the way. If you get any value out of it, hit the like and subscribe buttons. It helps YouTube algorithm favor my content and encourages me to produce more content just like this. Stay safe and see you again in the brand new 2022. Bye.